The year 2021 was a watershed moment for cryptocurrencies. But what will happen in 2022? Over the last year, we've seen Bitcoin hit many new all-time high values, followed by significant dips and increased institutional buy-in from major corporations. Late last year, Ethereum, the second largest cryptocurrency, also reached a new all-time high. New Bitcoin restrictions have piqued the curiosity of US government authorities and the Biden administration. People's interest in crypto has soared in the meantime. It's a hot topic not only among investors but also in popular culture, due to everyone from longtime investors like Elon Musk to that kid from high school on Facebook. According to Dave Abner, head of global development at Gemini, a renowned cryptocurrency exchange, 2021 marked a breakthrough in many aspects. The crypto business is receiving a lot of attention and interest. However, the sector is still in its early stages and is continually changing. That's one of the reasons why every new Bitcoin high is quickly followed by a sharp slump. It's tough to forecast where things will go in the long run, but experts will be watching issues like regulation and institutional acceptance of crypto payments in the next months to get a clearer feel of the market. While it's tough to make exact predictions, we asked 5 experts what they're watching in the crypto industry for the future. Regulation of cryptocurrencies. Expect to hear more about Bitcoin legislation in the future. Stablecoin regulation has piqued the curiosity of US officials. Lawmakers in Washington, D.C., and around the world are trying to find out how to make cryptocurrency safer for investors and less appealing to hackers by enacting regulations and guidelines. According to Jeffrey Wang, CEO of the Americas at Amber Group, a Canada-based crypto finance firm, regulation is certainly one of the largest overhangs in the crypto market globally. We would greatly appreciate unambiguous regulation. Chairman of the Federal Reserve, Jerome Powell, recently stated that he has no intention of banning cryptocurrency in the United States, while SEC Chairman Gary Gensler has consistently commented on both his own agency's and the Commodity Futures Trading Commission's role in the cryptocurrency market. Enforcing the law in the industry. Investors are certain to be harmed, according to Gensler, if stronger regulation is not implemented. Furthermore, the IRS has a vested interest in ensuring that investors understand how to report virtual currency on their tax returns. The statements of Gensler and Powell are in line with a growing consensus among the Biden administration and other U.S. politicians that stronger cryptocurrency regulation is required. Regulation, like most things in Bitcoin, is fraught with difficulties. Wang explains, there are various agencies that may or may not have jurisdiction to monitor anything. And it varies from state to state. Clear legislation would remove a major obstacle for Bitcoin. At this time, what impact could new regulations have on investors? Crypto tax reporting measures were included in the president's $1.2 trillion bipartisan infrastructure package, which might make it easier for the IRS to trace crypto activity among Americans. That's why, even before the new regulation, experts recommend that investors maintain track of any capital gains or losses on their crypto assets. The new regulations may also make it easier for investors to disclose cryptocurrency transactions correctly. Shahan Chandrasekera, CPA, head of tax strategy at CoinTracker.io, a crypto tax software startup, recently told Next Advisor, exchanges will have to submit 1099-B tax forms with cost basis information to investors. This will considerably minimize the amount of time required to file crypto tax returns. In already unpredictable markets, regulatory news can have an impact on the price of cryptocurrencies. Because of market volatility, investing is a good idea. Cryptocurrency investments should make up less than 5% of your whole portfolio, according to experts, and you should never invest money you can't afford to lose. Approval of a crypto ETF. On this front, the first Bitcoin ETF debuted on the New York Stock Exchange in October, marking a significant step forward. This is a new and more traditional approach to invest in cryptocurrency. Experts suggest that BITO Bitcoin ETF allows investors to acquire cryptocurrency directly from traditional investing brokerages such as Fidelity or Vanguard, where they may already have accounts. We do it in the stock market, we do it in the bond market, and people might want it here, Gensler said last summer at the Aspen Security Forum. However, some argue that the BITO ETF is insufficient because, while it is tied to Bitcoin, it does not actually own the cryptocurrency. Instead, the fund invests in Bitcoin futures contracts. Experts suggest Bitcoin futures may not directly reflect the price of Bitcoin, despite the fact that they follow the overall patterns of the actual cryptocurrency. For the time being, Investors must wait for an ETF that holds Bitcoin directly. The SEC has considered ETF clearance numerous times in recent years, but BITO is the first to receive permission. The future of Bitcoin. Because Bitcoin is the largest cryptocurrency by market value, and the rest of the market tends to follow its patterns, it is a good predictor of the crypto market in general. In 2021, the price of Bitcoin embarked on a roller coaster swing, reaching a new all-time high of $68,000 in November. Following earlier highs of over $60,000 in April and October, as well as a summer decline to less than $30,000 in July, this current record high has been set. Because of this volatility, experts recommend that you keep your crypto assets to less than 5% of your whole portfolio. But how far can Bitcoin rise? According to many experts, it's simply a question of time until Bitcoin reaches $100,000, not if. According to Kiana Daniel, author of Cryptocurrency Investing for Dummies, Bitcoin's past may provide some pointers as to what to expect in the future. Since 2011, Daniel claims that Bitcoin's price has experienced numerous massive rises followed by pullbacks. I anticipate short-term volatility and long-term growth from Bitcoin. What the price volatility of Bitcoin means for investors. The volatility of Bitcoin is yet another reason for investors to stick to a long-term strategy. If you're buying for long-term growth, don't be concerned with short-term fluctuations. The best thing you can do is set it and forget it when it comes to your cryptocurrency investment. Simply put it out of your mind. Each emotional reactions can force investors to act rashly and make judgments that result in losses on their investment, as experts continue to warn us every time there is a market movement, whether up or down. Cryptocurrency in the future. We can guess, and many will, on what value Bitcoin will have for investors in the future months and years, but the reality is that it's still a new and speculative investment with little history on which to make predictions. No one really knows what a particular expert believes or says. That's why, for long-term wealth accumulation, you should only invest what you're willing to lose and stick to more traditional assets. What if you awoke one morning to find that? Would you be okay if crypto was banned by developed countries and became worthless? Frederick Stanield, a certified financial planner at Lifewater Wealth Management in Atlanta, Georgia, recently told Next Advisor. Keep your crypto investments minimal, and never prioritize them over other financial goals such as retirement savings and debt repayment. Thanks for watching. Please don't forget to hit the red subscribe button. Also turn on your bell notification icon, so you'll be notified when a new video is uploaded to our channel. Thanks.